You're listening to AI PRISM from Seoul Economic Daily.
It's Tuesday, May 12. I'd like to share some thoughts about retail investors. Today, we are dissecting the current KOSPI rally, separating the government's tone from the actual fundamentals, and, well, identifying some key risk flags for long-term portfolio holders.
Yeah, and there is a lot of official optimism to sift through right now. Finance Minister Yoon-cheol recently stated that the KOSPI, which is Korea's main stock index, remains, in his words, undervalued.
Right, he's referencing that historic Korea discount.
Exactly. And when you combine that messaging with the 2024 repeal of the DM2, that's the financial investment income tax, retail sentiment is just surging. I mean, brokers are raising targets aggressively, with one bull case even hitting 12,000.
Oh, wow, 12,000. But, I mean, I have to push back here. With brokers raising targets that high, isn't this rally just dangerously top-heavy right now?
It absolutely is. The headline KOSPI is up 78% year-to-date, which looks great. But if you exclude just two companies, Samsung Electronics and SK Hynix, that rally drops to just 30%.
Wait, really? Just 30% without those two?
Yeah, you are buying massive concentration risk masquerading as broad index growth. Plus, JP Morgan just warned of a 7 to 12% downside risk to Samsung's operating profit, specifically due to rising labor costs.
Right, so it's a concentrated tech rally, which connects to this surging retail FOMO I'm seeing. People are aggressively tapping into Meotong, right?
Yes, Meotong. Those are floating rate open-ended bank overdrafts. Margin loans at Korea's top banks just hit a 3-year high of 40.5 trillion won.
Which is, what, about $29.3 billion US dollars?
Exactly, $29.3 billion in margin loans.
I mean, using floating rate loans to chase a heavily concentrated rally, that feels like building a house on stilts in an earthquake zone.
That is a perfect analogy. It is a classic late cycle signal. High leverage creates this illusion of safety while prices go up. But when a correction hits, those leverage positions have to unwind, which triggers a much sharper market drop.
So if the tech stack shifts, that earthquake hits. And global AI shifts are definitely threatening those concentrated Korean giants. Alphabet is actively closing the market gap with NVIDIA right now.
Right, and if Alphabet's custom AI chips, their TPUs, start taking market share from NVIDIA, Korean HBM, or high bandwidth memory, suppliers are going to have to drastically adapt their revenue models.
Because retail investors see that direct tech risk, they look for safer backdoors. I'm seeing a lot of plays on Samsung CNT, since CNT holds 118.6 trillion won.
Which is roughly 86 billion US dollars in listed affiliates, yes.
Right, $86 billion. It trades at a massive discount to that value. So is it actually a smart backdoor play on Samsung Electronics?
Well, it seems smart until you hit the cable trap. A cable is a family-controlled conglomerate, and they carry deep structural discounts due to incredibly complicated governance overhangs. It's not a temporary arbitrage opportunity. It is the market pricing in a permanent structural reality.
So the equity leverage is risky, and the backdoor plays are structural traps. This perfectly bridges into the risks of retail yield chasing. People are desperately pivoting to covered call ETFs.
Oh, absolutely. Assets in those covered call ETFs just surged to 23.73 trillion won.
So about 17.2 billion US dollars. But, I mean, Korean yield disclosures are entirely unstandardized. So without a standard metric, how do you know if you are actually earning yield or just getting your own principal handed back?
You often don't. High advertised yields in these funds frequently mask capped upside. The fund might literally be cannibalizing its own net asset value, just returning your capital to you to meet those distribution targets.
Wow. So as you manage your long-term Korea exposure, consider one final variable. How might upcoming geopolitical macro events, like the Trump T summit, which could introduce new AI export controls, suddenly test this highly concentrated leveraged tech momentum? That's today's AI PRISM, Retail Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.